Over to
All right.
you.
Good evening, guys. Good evening. Welcome back to our class. This is Coach Chidera with you guys. All right. We are back to our technical analysis training where we discussed about the price action patterns you can use to trade and know the possible market movement. So as of yesterday, we treated on the bull flag and we also treated on the bear flag pattern, which is the two type of flag pattern that we have. Then we also talk about the cup and handle pattern, which is not quite necessary for you to dive in seriously because what you still end up trading in a cup and handle is what? A bull flag. Because at the end, your entry on your cup and handle is still what? Your bull flag. So I discussed yesterday that we should just instead of diving in to be looking for the cup and handle, we should just look out for what bull flag and trade. So I also talk about that we're going to discuss some wage patterns tonight, which we have two form of wage patterns: the rising wage pattern and the falling wage pattern. So we're going to start with the rising wage pattern. He said a rising wage is a chart pattern within a context of an uptrend. All right. They say the rising wage is a chart pattern within a context of an uptrend. Now, like I said before, the name might confuse you. All right. Rising wage doesn't mean it is a buy signal. No. Rising wage is used to identify a change of trend. Like I said yesterday that when we're coming to this class, you should come with a book. Make sure you understand this very well. Rising wage is used to identify a change of trend and not a continuation of trend. All right. But let's continue with our write-up. A rising wage is a chart pattern within the context of an uptrend composed of two upward slopy and converging trend line, connecting a series of higher swings / pivot highs, which is highs, and higher swing / pivot lows, which is low. So what does it mean? It means that it's within a context of an uptrend with two upward slopy, which means both the resistance is upward slopy and both the support is what? Upward slopy, and they are converging. Just one of them is slopier than the other. All right. The sloping measurement, if you actually measure it by angle, is not equal, like it's converging. You can use your dictionary to understand more of the meaning of converging. All right. Background said the power of a rising wage can be greater after a moderate upside move due to the possible decrease of underlying support. Now, let me just open my trending view and try to draw something out of what we just read out now. All right. Oh, sorry. You guys didn't remember that I wasn't sharing my screen. Oh. Sorry about that, please. Oh, sorry about that. Sorry about that. All right, let me start again. Let me just kind of start again. All right. They said a rising wage is a chart pattern within the context of an uptrend composed of two upward slopy and converging trend lines, connecting a series of higher swing / pivot highs, which I call highs, and higher swing / pivot lows, which I call what? Lows. So this simply means that in a rising wage, for you to see a rising wage, your support will be what? Upward slopy. And your resistance also will be what? Upward slopy. Because you said it consists of two upward slopy and converging trend lines. So in the meantime, let me just open my trading view and try to draw a structure, a similar structure to that. Sorry, I was watching code before. Let me just kind of check something. All right, let me select which color I select now. It has one form on BTC, USDT. But I'm not going to identify it. I'm just going to use the chat for now. Please make me back the host, please. I don't know why it's connected.
Sorry, please unmute yourself. Oh, you are unmuted. Okay. You are
okay. Back. All right. So as I was saying, I was in the moment. Wait, let me share my screen. All right. I was in the moment of drawing a structure
Your network is breaking. The network is breaking.
how if a rising something before we stop. It's from within a quarter for. Can you hear me clear?
You're still breaking a bit.
It's kind of windy and rainy. I think that's why it's affecting the network.
Oh, you're getting better now.
All right. So it's from keep rising, but at a time we start identifying this structure that we call what? A rising what? Wage. Now, not a rising wage, okay? For you to understand a rising wage very well, the truth, which is this, the resistance, sorry, is what? Upward sloping, and the support here is also what? Upward sloping. But you should notice that at the end of it, like it is kind of what? Coming closer to what? Each other, and not expanding to each other. If you look at this line, you can see that the distance between year and year and year and year are not what? The same. So this is what happens in a what? In a rising wage, in a wage pattern. They will keep kind of what? Coming closer, but at the same time, they are both what? Upward sloping. So at the end, what do we expect? We expect the market to actually what? Break out, to identify what? A change of trend. This is why I said whenever you hear a rising wage, don't think it's a bullish pattern. It's what? It's a reversal pattern. It's a bearish what? Pattern. So when this rising wage is broken, not the resistance, you expect what? A fall or a retest and what? A continuation. Because this unit support that is broken will definitely what? Serve as what? A resistance, which will reject that market on a retest, and you expect what? A total what? Change of trend. But when this market is still within this rising wage, it means that the market is still what? That uptrend. So you can find this rising wage when the market has been going up for a long time, you know, bouncing up. At a time when you start connecting trend lines and identify this kind of rising wage, knowing that the change of trend is what on the way, and you should be ready to what leave that market as soon as possible. Because most times the force that it used to fall can be very, very great. Example is 2021. 2021, after the whole bullish market, 2021, it was a rising wage that really what for the market. Let me see if I can still find that rising wage on this BTC of that 2021. I think, because as of then, I draw that rising wage. Let me see if I can still find it. Okay, that's it here. That's it here. Let me check. She's 2021. Yeah, you can see that. It's on what 21. This is 21 March, May, June. Do you see that? Now let me make it more clearer for you. I still remember that I even draw this in 2021. Because this is my trading view account. So everything is well in place. All right. This is what an example of what a rising wage. What do you notice here? This is a daily time frame. You can imagine a daily time frame to form a rising wage. You can see how the market has been what in an uptrend. Going up, going up, going up. And at a time, it starts retracing, go more high, retrace, go more high. And when I connected my trend line, what did I notice? I noticed what a rising wage, identifying a total change of trend. So I started trying to draw a possible what resistance that can make that market to what break. Before you know it, the first fall happened, which is this. This was a very big long candle. This candle you are seeing from year to year is a very big loss candle. And that was what the breakout. And because of the momentum, the retest could not even touch what that broken was support, which should serve as a resistance. It couldn't even touch it. Instead, the market was really fall so bad. And you can see that after connecting after I saw that this place, based on support and resistance, that was a very serious what support, I extended that trend line to the future to be able to identify a possible what serious rejection in this big fall. Because this fall was happening in an extent that, man, everybody was just fucking scared. Like, everybody doesn't know when the market will reverse. So what did I do? I looked at the daily time frame. I looked at where there was a very serious rejection, and I extended it. What do you see that happened? It's also what showed me the future was support, which you can see that took place here, and so what took place here. So it took place so many times before what the reversal. And look at it. When I thought you guys was bull flag, you can see where I also was identifying a bull flag, which was started what a bullish what market. You can see all the patterns I've been drawing every year. I identify a bear flag here. I identify a bear flag here, which I draw here, and I short it. You see, so these are all my future trades for you to be able to understand that this is not just barbarish that we are talking here. What we are telling you here is just the reality of what the market. So let's see more of the write-ups we have. I've already shown you guys an example of a rising wage pattern, and I've also shouted that it's not what a buy pattern, but that is a reversal pattern, which is what a sell pattern. So they say the technical analysts to use rising wage pattern as a beginning of selling what opportunities. Bam. The technical analysts, all traders will use what rising wage pattern as the beginning of what selling opportunities. Because within that wage pattern that is forming, all right, within that wage pattern that is forming, if it's in a daily time frame, if you go to a lower time frame, you will definitely identify one bearish pattern that will confirm you what to start selling. For example, this picture I just showed you guys last is what a daily time frame. Definitely something else also is forming the what inside that wage pattern on a what hourly time frame. What will I do? If I identify a bearish pattern inside that wage pattern on a 1 hour time frame, I will use it to what find my entry before that breakout will happen. It's very simple. You need to combine, you know, different time frames. The higher the time frame, the stronger it is. When I identify a rising wage pattern on a higher time frame, I know that we are setting in. So what will I do? If I should find out, if I should identify a bearish pattern on a lower time frame, it's very what valid. I hope you guys are getting all this we are shouting. So let's see. Okay, you can see this. This was kind of exactly what I just draw you guys. It was rising. Now start what ranging in an upward sloping support and resistance. Why coming together at the end? Like you keep getting tiny. Instead of it expanding or being just like this, you know, being just like this, like a channel. Rather, it was both of them are what coming together, getting tiny. And you know, like I said when I was teaching symmetrical triangle, once it's getting tighter, the market cannot bear the tight environment anymore. Just like when you are filling a gas cylinder and you keep filling it, that you couldn't bear, it can end up what busting out. So the same way it happens in the market, once it keeps getting tighter, it will find itself comfortable in that environment. It will now what find a new space environment to fill up. That's when you see it was starting to fall. The fall can be very, very serious depending on the time frame that you saw it. So that's a rising wage for you. You can measure your TP. Yes. You can measure your TP by any means. So basically, I would say that measure your TP based on what supports. All right. Or you can simply measure the distance between year and year and extend it from what the breakout. So you just find any problem support. For me, I can start taking my TP from this support here. That's the support. This support here. If I can hold more, I can wait for year too. So most times the market can come down to where the first low was from. Any question? Any question?
Yes, sir.
All right. What's your question?
Yes, I wanted to ask, like, when you want to draw the pattern from the your like you are talking from BTC. If you want to draw the pattern from BTC according to the candlesticks, like where do you really position it? Because from the candlesticks from Bitcoin, if you look at it, you at times it is not really straight like when you draw the other lines up as you were demonstrating.
You're talking about BTC, right?
For example, BTC or any other coin.
All right. Come again with your question.
Yeah, what I was asking is, like, if you want to draw to to study if it will fall or not, where do you start to draw the? Where do you start to draw your analysis?
When you want to draw what?
Do you start drawing from where it started going up or where?
Is it your TP?
Yes, that's what I'm asking.
Your TP. I said in a rising wedge, we can just set your TP based on support and resistance. All right? Or you just measure a straight, a vertical line, just a line like this. From the first high, you just draw a straight line, measure it, and put it. You can put it from the breakout or from the inside too. So there's no specific way to set TP. So the best way I will recommend is based on support and resistance. That's why if you look at my chart now, you can see that I draw a lot of lines here. These lines are what? My supports and my resistance that are extended from the word back from the charts, or even at these present ones, to be able to identify what my possible reversal point. That's where I took my profits. You see, at this first four, I had my trend line drawn. And when it gets there, what do you see happen? It bounced back. So by then I must have only taken profit what there. This is a very long movement. Because in the daily time frame, that's why it looks small. But that's a very, very long movement. That movement is more than that movement is close to 20%, or even more than 20% movement here. So you just need to make sure that you apply your support and resistance, because even if you set your TP or you have a specific way to measure your TP, if the market is hits a support, there is a possible serious reason for it to bounce back immediately. Do you understand?
Yes.
So you just need to watch out your support and resistance, your candlesticks too. So what your candlesticks are also saying when you get to the support, that was we let you know whether should you continue holding or should you close. So you will still learn candlestick if it has not been taught. I'm not aware whether it has been taught, but if it has not been taught, another teacher that will be coming in will also talk about a candlestick. But in the meantime, the book that I sent to you guys with about candlestick in it will help you a lot. It has all the information, detailed information that you need to understand about candlesticks. Any more questions?
Okay, so I'm okay now.
Okay. All right. All right. Let's look at the real life example they give us here. You can see the similar thing we are talking about here. A long movement, uptrend. And for a need, when you connect your trend line, you start to identify what? And a two upward sloping trend line that is converging to what? Each other. Whereby you will now start to what? Expect you now start to expect what? A breakout and a retest. You can see that on this particular one, there was a very big breakout, and finally the retest also came. Now, when the retest also came, you don't just buy when you don't just sell when you touch that what resistance. You just have to wait and see a confirmation. For example, you can see after you touched it, the next candle that formed closed in a bearish what candle. It's a bearish what signal telling you okay, but it can't break in, or you start selling again. You see that? But if you just jump in, the market can end up breaking this and keep going, like continuation, start going up based on the FA, fundamental analysis surrounding it. So you just have to wait and see what the candlestick, which is part of the technical analysis, will feed you for you to what make your entry. So let's talk about the falling wedge. Falling wedge share pattern, which is just an inverse of this. All right. The falling wedge pattern is a chart pattern within the context of a downtrend, composed of two downward sloping and converging trend lines, connecting a series of lower swing / pivot highs and lower swing / pivot lows. The power of a falling wedge can be greater after a moderate downside move. This is the possible decrease of overhead resistance as the pattern is formed. So what are they saying? They say a falling wedge is within the context of a downtrend, but it's a buy what pattern. To learn to differentiate it, falling wedge occur within the context of a downtrend, but it's what a buy what pattern. It is used to identify when the buy trend is a soft stage. It's used to identify when the sell trend is a soft stage and the buy trend is what is getting started. So traders use a falling wedge to begin a start of what buying opportunities. Do you understand? When you see a falling wedge forming, you should be looking for what a buy opportunity and not a sell what opportunity. Yeah, the trend is a downtrend, but when you see a falling wedge, it is telling you that the trend is what changing. And once the resistance is broken, boom, the market will what lie. It's a technical analyst will use the falling wedge pattern as the beginning of what buying opportunities, especially when in the context with other tradable buy what setup. This is what I'm saying, that you might find when I was talking about the rising wedge, I was saying you might find the rising wedge on the higher time frame, and in a lower time frame, you still find a sell pattern inside our rising wedge. So it gives you more accurate willing when you still find another pattern inside it that still stays the same thing. So that's what they are trying to say on this wedge pattern, the falling wedge. They said especially when in the context with other tradable buy words set up. So when you see a falling wedge forming, and inside the falling wedge, you now find a buy pattern. What does it say? That you are going to have a more willing trade. Because a bigger structure is saying falling wedge, that's a change of trend to be bullish. Now the lower time frame is now giving you a bullish structure. Meaning that yes, it's a go ahead order. Because you only make your entry on a lower time frame. I hope you guys are getting it. So if you look at this, it's still an inverse of what we just talked on a rising wedge. When the market is in a downtrend, and for a night, you start falling a rising wedge. What do you expect? A breakout, a retest, and a continuous movement. So there's nothing much about it. This is an example of what they are trying to say. You can see as how market has been falling before the rising wedge before the falling wedge start forming. You see a breakout, you see a retest. What do you see again? A movement. Now, for your TP, still the same thing. I said you can measure from here, from your support to resistance, as in where you find the support and resistance, straight line. And you can move it from your breaking out. You see? So they also give example here, they also give it here. which you can use to find your what, your TP. So the market can even put your TP and continue what moving. But for you not to be able to lose your profits, you just have to what, take your TP. You also find your TP using what, resistance. For example, as I saw a resistance here, I can call that my what, TP too. I also saw a resistance here. I can extend it. I think that was okay. I can extend it and call what, my TP. So you need to use what, resistance to find your what, your buy what, TP. Why you use a support to find your what, sell what, TP. Any question? Any question? If you have a question, you can identify yourself. Okay. No question. Let's see if we can treat more before we close. Let me see how many we have more. Back pattern, double top, double bottom, I'm just checking something. I want to see what we have remaining. Wow, we still have plenty of balance pattern. General pattern. I mean, we still have plenty. All these are what you have within you, like you need to know it, like really know it. So the next pattern we're going to talk about is the pullback pattern. Nothing new about this. It's just like an uptrend, pulling back, continuation, pulling back, continuation. But let's see what this is. They say bull pullback trading pattern. A bull pullback is when a price action within the context of an uptrend traces on an orderly price decline, retracements or correction from the peak of an up leg, also called what? Pullback. So what they mean is that when the market is in an uptrend, sorry, hold on, let me check something. So what they are saying is when the market is in what? In an uptrend and start creating what? An orderly price decline from the peak of what? An up leg. This is what they mean. Market is in an uptrend, all right? Then once it's, market doesn't just go in a straight line. It creates orderly price what? Decline. So a bull pullback simply means once you draw a trend line like this, the market is in this structure. It goes like this. It goes up. Then once it's coming down and hit this trend line, it bounces up again, create more high. Once it goes back and hit this trend line again, it bounces up again. Whenever you touch the trend line, it bounces up. So this is what they call what? Pull back. So what do you do is on this kind of pattern, you look for buying opportunities at this pull back. There can be plenty. So whenever you touch that trend line, that's where you're buying. But once you break this trend line here, forget about anything concerning bull pullback. It's very simple. You can take your profit at the pullback. Let's say if you enter here, If you enter here, you can, sorry. If you enter here, you can take a profit what? From the last high. That means you are trying to check it. So it's very small profit. If you enter here, you can take a profit from the last what? High, which is here. If you enter here, the same thing, measure. That's how you what? Take your profits. So there's nothing much in this. It's just like when you see an uptrend that is doing not only price decline or a pullback or a correction, and you draw a trend line connecting those what lows. So what you need is what? Use those what trend lines to identify what support to start making your buy what entry. That's why they call it what? A bull what? Pullback. Very, very simple. Technical analysis will often use the bull pullback pattern to begin looking for what? Buy entries as the asset which is support or wholesale what area. That's what I'm trying to say. You use that support trend line to identify what? Your buy opportunities. This is an example of what they are trying to say. You can see as they draw their trend line, to say that your buy entries are what? Here, and what? Here. The same thing in this live chart here. So let's see if we can identify such bull pullback on our live chart. Yeah. This kind of chart pattern usually used to form on coins that slowly grow, not coins that just pump, coins that slowly grow, gradually. That's when you will see it going like this, waiting an orderly price decline. Let me see if I can find one. This here is still a similar word example. All right. After this, remember, before you can draw your trend line, there must be at least two touch. There must be at least what? Two touch, two lows, or what your two highs. So depending on the trend line you are drawing, you can see after this first touch, second touch, I draw my trend line, which means on another pullback, I will take this trade. Even here, I will check what? This trade. But you can see after that trend line was broken, the market was drop, retest, drop, come back again. Let's see if we can see more other ones that can give us more clarity. This is an example of what? Another what? Bull pullback. Where you see the first touch, the second touch, the third touch, I will buy. And I'll take my profit from this what? Measurement. You see that? And I'll also look for the what? Whenever another touch came, another touch even came again at a particular point, which I can also what? Buy. I'll take my profit at what? This level. So it's just like, even when you see a bull pullback, you can even see another pattern inside it. When you try to connect another trend line, you might even see another pattern inside it. So that's, or do you have any question on bull pullback? Do you have any question on bull pullback?
Yes, sir.
What's your question?
Yeah, what I wanted to ask is, like, so you mean when you draw the straight line going up, as soon as the candlestick, if one of the candlestick crosses the line down, will it not still follow the pullback?
You mean, come again, come clearly.
I'm asking if, like, as the line, as you draw your TP going up, if
Yes.
one of the candlestick crosses the line down, will it not respect the pullback or what?
I'm not yet understanding you. Are you talking about take profit?
No, I'm not talking about it. Like you said, so what I'm asking is, like, if it crosses the line down,
The
you should
support.
not, like, yeah, when it crosses the support line down, you
Okay.
should not to continue to buy, or how? I don't really understand how you.
Once you break that trend line, it's a change of trend. Like, for example, if I'm looking at this now, this particularly now, I can sort of be seeing a wave pattern. Do you understand? It can still be a wave pattern. A wave pattern can still be formed. When you try to connect the resistance, you might end up finding what? A wave pattern. So similarly, so whenever that support is broken, it can identify a change of trend. So what you do is you're no longer looking for another buy opportunity until a pattern is formed, like a new pattern to tell you that, okay, you can still buy. That's when you what? Buy. But at the moment, you should forget about what? Buying. Do you understand?
Yeah, I understand.
All right.
Yeah.
All right, let's talk about the bear pullback. Still the same thing, but in an inverse way. We say the bear pullback trading pattern. A bear pullback is when a price is shown within the context of a downtrend, traces an orderly price increase, retracement or correction from a low of a down leg. Well, what does it mean is this one you have to draw what? A resistance. Yeah, you can see exactly what they mean. You have to draw what? A resistance. So the market is in a context of a downtrend, but when it's going down, it retrace. When it's going down, it retrace. When it's going down, it retrace. What do? You draw your trend line connecting what? Those highs. So whenever it retrace and touch that trend line, it means what is going to what? Fall again. You sell, check your profit. Whenever it come again, you sell. But once this trend line gets broken like this, there's no need looking for what? A sell opportunity. Because that force that have been pushing it down has what? Been broken. Do you understand?
Yeah.
So there's no much difference. It's just an inverse of the bull pullback. So this one is the bear one, while the one we talked last was the bull one, bullish one.
So is that what they always call a breakout?
Yeah, when the trend line is broken, or when the support is broken, definitely the trend line is called what? A breakout. Especially from a structure. You understand? From a structure. For example, let's say your house is locked. The whole house is surrounded by locks. You understand? And at the end of the day, people that are inside the house were able to break the door and escape from that house. It's actually what? A breakout. Do you understand? So the same thing in a pattern, when a support and a resistance is holding the market together within that structure, and and the market escape that structure, you call it what? A breakout. Exactly.
Okay. Yes. Okay.
All right. So you can see live example here that they gave us. After you draw your trend line, connecting those pullback, you won't sell on the first and second, because that's the first and second that you use to connect your trend line. Remember, 2 lows or 2 highs for your trend line. Then the third ones you'll be looking for, which is this, and another one that come close to it. So it's very simple. It's not a must to touch, but whenever it's touch, you need to what? Kind of sell. All right. So what's our time? Okay, I think we are going to round up. I'm going to round up. So by tomorrow, we are going to discuss on a double top chart pattern, double bottom chart pattern. We're going to discuss on a double bottom and a double top chart pattern. And if you have time, we also discuss on a, yes, definitely. We will also discuss on a triple bottom and top what chart pattern. So they are similar, like the triple and the double. It's just the touch. How many counts of the touch? You understand? So I would advise you guys try to read up so that when the class starts tomorrow, you'll find it easier to understand. All right. So any question, guys? Any question? No question, right? All right. That will be the end of our class. You guys do have a lovely night. Bye.
Same to you, sir. Good night.
All right. All right.